Miningscout meldet sich nochmals von der Mines and Money 2013 aus London. Auf der Suche nach interessanten Gesprächspartnern haben wir zum Abschluss eine absolute Koryphäe und eine Kapazität auf dem Sektor der gesamten globalen Marktbetrachtung bei uns, den sehr bekannten und über Sprott Global Resource ebenfalls bekannten Gründer Rick Rule bei uns, den wir somit hiermit begrüßen dürfen. Rick, thank you for taking time and speak with us. You are an expert in the global market, so interesting for us is to know your thoughts about the recently bear market of the gold and what can we expect in the next future.
I think your readers need to examine history, in particular the history in the 1970s, when, as your readers and listeners will recall, the gold price advanced from $35 US to $850 US, a spectacular bull market. Many people forget that in the middle of that bull market, in late 1975, the gold price fell by half. It had gone from $35 to $200 and fell from $200 to $100. A 50% cyclical decline in a secular bull market. Investors that had neither the cash nor the courage to stay the trade missed a move from $100 at the bottom to $850 at the top. It is my belief that currently the price weakness that we've seen in precious metals, in fact across the board in resources, is a cyclical decline in a secular bull market of exactly the same type as occurred in 1975 and 1976, and for exactly the same reason: relative strength in the US dollar relative to other currencies. In this case, past is prologue.
Okay. Do you believe that we are in the same situation like in the past and the gold price will rise up again in the short time?
I absolutely do. On a global basis, it would appear that the choice is between gold and the US dollar. And from my own point of view, despite being an American, I think the outlook for the denominator, the US dollar relative to gold, is not positive. From my point of view, if I had a choice personally between owning gold or the alternative, which is the US 10-year Treasury, I personally would prefer gold because I think that gold will do relatively well compared to the alternative.
That's impressive information. Thank you for it. But this brings me to the next question. Gold resources, gold companies. We have seen a lot of companies are angry about the declining gold price and trying to get back the shareholders' confidence and improving the assets and initiating cost-saving programs. In your opinion, will be that enough in the next time to bring back the confidence of the shareholders?
We need to shake out many more companies. The bull market that went from 2003 to 2010 was far too generous. The cost of capital for the juniors was far too cheap, and as a consequence, they wasted far too much money. The consequence of this 7-year bull market is that there were too many excesses in the system. And while the price declines that we've seen have been painful, they need to continue. They need to continue to the extent that many of the non-viable companies that the industry formed last decade need to become extinct. My suspicion is that for the best companies in the sector, the very best, the top 10% of issuers, junior issuers globally, that they have already found a bottom. But it won't feel like the end of the market because perhaps 80% of the companies have much, much further to fall.
Oh, okay. And for the general market, as a bigger view, the base metals also are under pressure or have they a better future than the precious markets?
I suspect that the base metals markets will do better than we think. I don't see very much strength in Western world demand, but given the fact that I have to travel a lot in my business, I'm seeing surprising resilience in frontier and emerging markets. And my own outlook, not just for markets like China and India, but my outlook for markets like Indonesia, Mexico, Chile, is fairly buoyant. So I'm inclined to believe, as an example, that the copper price, which many people think will weaken substantially, will do fairly well. And copper producers that are efficient have very, very, very good cash margins at these prices. So I think that the base metals markets, have some value.
Yes, oh, that's fine. That's good to hear. It's a chance. It's a chance for the next time. At last, Rick, there is such a lot of money in the market, but no money is in the resource sector. All are fixed in the bonds and everywhere. Have you any idea what should happen that the big money is coming back into the resource sector?
I think the big money is back in the resource sector. I think, yeah, I mean, we, as an example, Sprott, my company, recently funded a deal with Zijin Mining, the state-owned non-ferrous metals mining company in China. We believe that by the end of this year, we will have another joint venture signed with another brand name Asian investor. We have had talks with sovereign wealth funds, we've had talks with private equity. The big money is already back in the sector. Issuer capitulation has not happened yet. When the bottom of this market has been reached, when it becomes similar to the market that existed in the year 2000, you'll remember that 1990 to 2003 bear market, when you come to the point where the issuers are realistic about the cost of capital and their needs on a 2-year going forward basis, the money is already there, waiting to come into the system. The only thing that remains to happen is realistic attitudes on behalf of the issuers with regards to their cost of capital. The big money isn't going to come. The big money is here. It's at this show. It's walking around looking for a home. It just needs to be treated fairly.
Thank you, Rick. It was very nice to hear your thoughts about the situation on the market. It was very impressive. Thank you for the interview.
Thanks for the opportunity.